Good morning. Good morning. We are going to wait just a couple of minutes for some people to join in, and then we'll jump right in. Welcome, welcome. Just going to wait a couple minutes for a few more people to join, and we'll jump right in and get started. See a few more people joining. Welcome. Good morning, everyone. Good afternoon, maybe if you're on the East Coast. Good morning, a couple more people. All right, let's jump in and get started. Welcome, everyone. Thank you so much for joining us today for our TeleTalk. Quick note, this webinar is being recorded. By attending, you are consenting to this recording. I'm Tyler McLaughlin, TeleSign's event manager, and I'm here today with my colleague, Blake Picolo, our resident identity and fraud expert, who is going to be talking about the world of regulatory technology. Blake, you want to say hi to everyone?
Yeah, hey everyone. I'm Blake Picolo. I do identity and fraud advisory for our partnership team. So any of our partner companies, I work with them to help provide advice on our identity and fraud products and run tests and things like that. So it's a pleasure to be here today. Thanks, Tyler.
Awesome. We're glad you're here. Before I pass the baton over to Blake, I'd like to take a moment and set the stage. Shady business practices and fraudulent activity continue to be a nuisance and pose serious financial liability to industries and consumers. This has led to governments enacting larger and more robust regulations to protect the stability of our society. What does this mean for your business? Well, that means more rules for you to follow, of course. Recent forms of sweeping government regulation include GDPR, CCPA, PSD2, and SCA. Not only are these acronyms difficult to navigate, but the regulations behind them can be even more difficult. This has given rise to the category of regulatory technology, also known as RegTech. Blake is going to cover how RegTech works and how your organization can benefit from RegTech solutions. I do want to note that TeleSign is not a RegTech provider. We are not here to sell you a specific solution. Our TeleTalk series is geared towards sharing our insider info and perspective on all things having to do with fraud and security. We've taken an interest in RegTech because it runs adjacent to our security and identity solutions. We're passionate about protecting businesses and their customers, and we support any technology that helps to accomplish this. Before I pass off to Blake, I do want to note that the Q&A is open for submissions at any point throughout the session. Feel free to drop a question in the Q&A and Blake will answer at the end of the session. All right, Blake, you ready to dive in?
Yeah, let's do it, Tyler.
Cool. I'm going to turn my video off and you're welcome to share your screen.
All right, let me get this presentation shared real quick. All right, so we're going to go into all things regulatory technology. I have a quick agenda here. So we're going to start with what is regulatory technology. So a quick look into how the industry developed, how these companies came to be, and how we can benefit the companies that are getting services from RegTech companies. For those of you who don't have a strong background or any knowledge on what exactly RegTech is. Then we're going to look into the technologies behind how RegTech handles compliance and what type of use cases they're helping their customers to solve. Then we're going to help you identify which organizations your company should reach out to for your RegTech needs, depending on which industry you are in. And finally, we're going to look at the future of RegTech. So what types of things RegTech companies are doing to help support companies as we move into this next decade. And finally, we'll end with the Q&A as Tyler said. So what is regulatory technology and how does it benefit the companies that are leveraging their services? First off, RegTech is a fairly new kind of industry in the grand scheme of things. It started off kind of in the middle or late part of the first decade of the 2000s. In 2008, with the financial crisis that came off of all those housing market crashes and all of the issues with the financial services that led to the bankruptcy of a lot of financial organizations. Reform like the Dodd-Frank financial reform really started to increase the amount of regulation that financial institutions had to abide by as they were providing services to their consumers. And this was to protect both the economy of the various countries that these regulations were put into, as well as the consumers of these financial services that the banks were providing to. Organizations in the US like the FTC and the SEC began to issue large fines and other sorts of penalties for non-compliance to the new regulations that were put out. And so companies in the financial sector were having to put a lot more resources into maintaining all of these new compliance standards. And RegTech companies really saw that as an opportunity to come in and provide services that help these companies gain compliance without having to spend too many of their own, the corporation's own, the financial organization's own resources to keep up with all of these new compliance standards. So RegTech companies provide a few different services to these companies. They provide both advisory services on which regulations that these companies have to abide by depending on the services they're providing to their customers, as well as providing tools and solutions that once identified help these companies get to regulatory compliance while still maintaining their own resources, not spending too much of their own capital to maintain that compliance. Because what was happening shortly after 2008 is these financial institutions were spending so much of their own capital and resources on just maintaining compliance that there was a slowdown in the innovation that these companies were having with their own products. So they were looking for ways to leverage outside sources and allow them to get back to innovating the products that they were actually specializing in and were providing services to their customers. How do RegTech compliances help these companies to become compliant? So first off, a lot of RegTech companies are cloud-based SaaS platforms. And a lot of you are probably familiar with your own products on the benefits that cloud computing bring to your various products. And this is just as true in the RegTech market. So with the ever-changing regulation that their clients are having to conform to, the cloud environment really provides an elastic way for them to quickly get up to speed on the ever-changing regulatory environment in multiple ways. First off, size and computing power. As new regulations come up, RegTech companies have the ability to bring on new customers, to expand their processing to new transactions and new calculations that are coming through. And they also have the ability to bring on features much more quickly. So as regulation comes on that may require new types of encryption or new data storage regulations, they can use the tools that companies that like AWS and Azure provide to quickly integrate those new compliances into their environment and then push those out to their customers. And the tools that they're providing are helping services to reach compliance and then maintain it thereafter. So not only are they providing the tools that let your company become compliant to all these regulations, they're also providing tools that let you monitor this compliance, ensure that the tools in place are working and getting you to the appropriate compliance levels and identifying risks before they occur so that you can deal with them in a more proactive way. And how are they doing this? So like a lot of companies these days, they're looking at a combination of big data and machine learning to comb through all of the transactions that are coming into all of these different financial institutions, look for patterns, identify risks, and cut down on the overall manual processing that institutions are doing to monitor their transactions and maintain compliance. One really cool application that's come about pretty recently is natural language processing, which allows RegTech companies and other types of companies, obviously, to allow a computer to read through new regulation, to read through transaction text, and really put it to condense that down into certain text blurbs that are relevant to the reader. So a lot of new tech is coming out of these regulation companies to help them look through all of this expansive data that's coming through their systems at any one point in time. And one thing that I've noticed that's kind of a common theme across all the RegTech reading and conferences and things like that is agility, speed, integration, and analysis. And I think these four kind of ideals apply to RegTech really strongly. With the ever-changing regulatory environment, new regulations coming on every year. Regulations are also changing on a year-to-year basis. They really need to stay agile and have the ability to implement new regulation as it becomes required, quickly get up to speed on having the tools to implement that compliance, and then making it easy for their customers to integrate that compliance into their products through low-code, no-code solutions. And then after that compliance has been implemented, have the analytic tools in place to ensure and show that customer that the tools are helping them maintain compliance. There's nothing that's slipping through the cracks on their end. And if there is, have the ability to fill those gaps and make sure that they're maintaining compliance on a year-over-year basis. So the need for RegTech. Why would a company leverage a RegTech company instead, or an organization leverage a RegTech company instead of doing things internally? So shortly after 2008, financial institution annual compliance spending was hitting almost $1 trillion in spending to just maintain compliance. And they were looking for a way to lower this burden on their own company and push it out so that they could spend that capital on innovating their own products. So they're looking to, RegTech companies are looking to drive down the cost of compliance across the customer organizations that they have by creating the tools and then spreading them across these various organizations to spread the cost of compliance out across the industry. They're also developing scalable solutions so that an organization can go to a RegTech company, count on them to scale that solution as the organization grows. And for instance, if I, as a company, were to bring on a new product that was in a new vertical, they would provide the solutions to me to maintain compliance in that vertical and help me scale as I bring on new customers. RegTech companies have the expertise to proactively identify risks and issues with new regulation. So they're constantly looking at all of the new regulation that's coming online for financial and other types of business sectors, identifying the risks and issues that a customer could run into with that new regulation, letting them know and helping them implement the appropriate protocols to meet that new regulation standard. And finally, they're linking the controls with the risk framework. So a RegTech provider is going to have a ton of available controls in place to meet regulation for each different kind of business that they're suiting and that their customers have. And they'll look at the risk framework for one customer and set those controls appropriately to the risk profile for that company. But if the company were to bring on a new vertical and adjust their risk profile accordingly, the controls are in place to change the encryption, to change who has access to certain data, to help them meet that new compliance standard that they have with their new risk profile. And it's predicted that 34% of all regulatory spending is going to be within RegTech by 2022. So this is a really increasing market. A lot of spending is being done here by organizations as RegTech brings more and more tools online to help them meet their regulatory needs. And there's a lot of work between RegTech and end clients, as well as even the regulatory bodies, to kind of build this new regulatory environment to make sure everyone's on the same page and is ready for the challenges that are up ahead with new and adjusting financial changes in the market, as well as other types of organizations as well. Okay, so what as a company are you trying to avoid? Why are you leveraging a RegTech provider? And there's a few things that you can be penalized for when it comes to regulation. So of course, fines have become a much bigger threat coming off of 2008. Facebook was fined $5 billion for failing to maintain the appropriate customer privacy laws. And the top 20 banks globally have been fined in the hundreds of billions of dollars since 2008 for not complying to the various new regulations that have come about since then. There's also brand reputation hits that come along with that. I think famously Equifax a few years ago not only was fined $600 million or so, but they also had a huge brand reputation hit. And I think this reputation hit not only affected them, but also the credit bureaus in general after they had that data leak. And that's something that any organization, of course, is trying to avoid, making sure that in the public eye, they stay and are seen as a trustworthy company. And then on the lesser level, audits and inspections can occur as well. So with a lot of this regulation, there's obviously yearly and biannual audits that may take place to ensure your organization is maintaining compliance. And RegTech organizations can help you deal with those audits and those inspections, and they provide tools for reporting and things like that. But you would never want to have to go above and beyond and do extra auditing and reporting steps due to issues that you had with some of this regulation. So you just want to make sure that you're using your resources to innovate your product instead of tracking all of these transactions above and beyond what you should have to do. So what use cases can you go to for RegTech companies? So I'm going to talk about 4 use cases that RegTech companies are helping clients to create solutions for. But obviously there's others. And I think at the end of this discussion, Tyler will be providing some links to some resources that can help you look at some of the other things that RegTech companies are doing as well. But we'll look at these 4 use cases and how RegTech is kind of operating in this space. So first off, know your customer and anti-money laundering, KYC and AML. This is obviously a use case that's very close to our hearts here at TeleSign. It's something that we deal in quite a bit and help our customers to work around and deal with these challenges. But basically, when a new customer is coming into a financial environment, either physically or digitally, much more commonly in the last decade or two, we want to know who that customer is, and we want to know what types of transactions to expect from that type of user. And there's a lot of regulation built around banks understanding who their clients are and who they're doing business for to make sure that there's no money laundering going through their networks that doesn't have visibility to it and isn't stopped. So RegTech companies will provide solutions where they're looking at the digital identity that a customer is providing. They're looking at the phone number, the email, the credit history of that person. They're bringing together all of those factors and onto their shared KYC platform. And they're creating a risk profile for that user, as well as a trust profile for that user, and then looking at similar users to see what type of transactions they're doing, so that later down the road, if this user starts moving outside the space, you can be vigilant in ensuring that there's no nefarious activity occurring. And that's where long-term monitoring of KYC really comes into effect. And there's also internally, not only from a regulatory standpoint, but internal reasons for companies to do their KYC due diligence as well. Companies like Amazon, Uber, Facebook want to make sure that they're not onboarding fraudulent users and fake users, because it could degrade the experience that legitimate users of their platform have. So for instance, on Uber, they want to make sure that when I call a car, the person driving that car is who it should be and who the app is telling me it should be, and that they're not having issues with fraudulent users on their platform, because that can really hurt their overall brand and their overall business operations. Next, we have transactional monitoring. So once you have a user on your platform, you need to make sure that you're tracking all of the transactions that go through that user's profile and that go across your entire network. And there's a couple goals here. One, you're trying to identify any issues or risks that come into your platform that may be cause for issue or nefarious business going on. And you're also trying to lower the customer friction for your legitimate customers so that they have the best experience possible. And by transactional monitoring, RegTech companies are helping customers to build risk profiles for each transaction and cut down on the manual processing that has to occur in order for those transactions to go through. So it allows them to look at their transaction volume as a whole and cut it down to a much lower percentage that they're looking at manually or actually checking in on, while a lot of the transactions with a low amount of risk profiling can just go through unimpeded. And then if there were to be an issue with a transaction, they are also providing tools for case management and investigation, so that as a company, I can go in and look at what happened with that transaction, track the facts around it, and even provide reporting up to the appropriate regulatory bodies if an issue was to occur, so that I can stay ahead of my reporting requirements and let regulatory bodies know that, hey, I'm checking into this, I have a good grasp on it, and I'm making sure that this type of activity is being minimized on my platform. Okay, and to that point, there's also a broader regulatory reporting tool that some RegTech companies are bringing to their clientele. So a lot of times, at least in the financial industry and in some other industries as well, there's annual reporting requirements that companies have to do to the public, to governments, to their customers, to let them know what's gone on the platform, either from a financial perspective or from an anti-money laundering, anti-crime perspective as well. And RegTech companies are providing the data tools for these companies to collect this data, log the appropriate fields, and then put that data into readable, reported formats so that they can keep checks on both their financial health as well as their criminal health within the organization. And not only are these reports provided on demand, but they're also providing real-time dashboards of this information as well, so that internal company stakeholders can look at that data on a real-time basis. And that provides a number of different benefits to your organization. It can provide security benefits. You can see who has access to what data. If you have a breach in data, you can see what may have occurred and why that problem may have occurred. But it'll also help your sales team even and your marketing team to see what types of transaction customers are becoming more interested in. Where do we see transaction volume increasing across our client base, to help us know where to point our innovation, to help us know where to point our sales resources, and to know what our customers are looking for from us as an organization. So a lot of these RegTech tools are providing multiple benefits. They're providing benefits both to allow us to maintain regulatory standards, and also allowing us to help grow our business and understand what our customers are looking for and be more innovative in the appropriate places. So really a lot of benefit from working with these RegTech providers. And the final one I wanted to talk about is fraud detection. So it kind of goes along similarly to KYC, but I think when it comes to fraud detection, a much more long-term thing to look at when it comes to your customers. So making sure that malicious users aren't coming onto your platform, and then for your good users, making sure that bad actors aren't trying to take over their account. You don't have identity theft issues within your platform. If someone tries to change their contact information, making sure that that user is still legitimate and they haven't had someone take over their phone. And then, of course, monitoring behavior across your platform to look for patterns that may show risk. So if a money laundering event was occurring on your platform, it may not be through one account. It may be through 15 or 20 accounts spread out to help hide that money laundering. So the RegTech tools can really come in, help you identify small pieces of that puzzle and build a broader picture of fraud that may be occurring on your platform. So really tools across the entire client lifecycle that helps to protect your customers as well as you as an organization when it comes to fraud and all the regulations that come alongside that. Okay, so how are RegTech companies meeting this compliance? So what is the life cycle of regulation coming out, being implemented, and then being followed down the road to make sure that companies are maintaining and being compliant? So RegTech companies kind of fit into a number of spaces. There's companies that will monitor regulation, parse through that data, figure out which pieces of regulation are important to their customers, so that they can then go and educate their customers. You know, there's a big component of education to the RegTech industry. Let their customers know what's important to them and which regulation they have to follow. So regulatory obligation, letting me know as a client that this is the new regulation that's come online that I have to follow as a business to ensure that I'm maintaining the compliance standards that are required to me by my governing bodies. Once we know my obligation as a client, maintaining that compliance or figuring out a plan to get to that compliant level. Which tools do I need to implement? What security controls do I have to have in place to ensure that I'm compliant with these new standards, and then execute that compliance with transactions as they come through my network. And then finally, once I'm implementing those tools to get that compliance, assessing that compliance, ensuring that the tools that I've put in place are meeting the compliance standards of those new regulations, and then following those over time, seeing if there's any issues there and making the appropriate adjustments to maintain that compliance long term. So that's kind of the life cycle as regulation comes online to becoming fully compliant and maintaining that compliance over time as an organization. And then managing compliance. So I spoke a little bit earlier about how much more regulation has come into play since 2008. And that really shows from 2008 to 2015, there was an increase of about 500% in the amount of regulation that was being published by regulatory bodies. So there was really a huge amount of work that was necessary to both track this regulation as well as implement these new regulation standards for each organization. And organizations were seeing upwards of 10 to 15% and greater of their capital being spent on maintaining compliance. And so in order to cut that down, what was started out as a very manual process had to become more automated. So these identity management, risk management, reporting, transaction monitoring started as a very manual process, a lot of labor being spent to comb through these transactions, make sure we're compliant. And RegTech companies help to bring on workflow automation to these tasks, identify which transactions were worth looking at versus which transactions could go through with less friction, and then continuously monitoring those workflow automations to ensure that they were providing the appropriate compliance levels to their customers. And finally, we've gotten into a lot of predictive analysis lately within the RegTech industry, where AI and machine learning are proactively identifying risks and issues so that we can put the controls in place to stop those before they actually become a big issue or before big regulation is sweeping to circumvent those risks. Okay, so how to identify your organization's regulatory needs? So there's a lot of different RegTech companies out there providing a lot of different services, and I have a slide shortly that'll just kind of look at the overall market and what different types of tasks companies are doing. But really, you should ask yourself these three questions. What industry do I fall into? So RegTech has expanded outside the financial industry and now applies to other types of companies as well that deal with industries that also have regulations. So, medical marijuana, healthcare, legal companies, all of those have standards that they have to apply to or have regulations that they have to follow. So that's really important first question to ask you am I in an industry where RegTech can help? And the answer is probably yes. Which regulation standards apply to you? So once you know what your vertical is as a new company, you have to look into which regulatory standards apply to you. And there's plenty of companies out there that can help provide guidance on which regulations apply to the specific types of transactions that your organization is dealing with. And then those companies will help you partner with organizations that actually provide the tools to get to the appropriate compliance level. And this can be a very complex problem, right? Depending on the industry you're in and region you're in, these standards are always changing. And there's a lot of different regulation out there that you may have to comply to depending on which region you're operating in. So in the US, we have specific standards like the Dodd-Frank financial reform that I mentioned earlier, which deals with consumer protection reforms. And that can even go down to a lower level. As Tyler mentioned, in California, we have the CCPA, which provides even more specific rights to California citizens. So depending on where you're operating, you're going to have to ensure that you have the right controls in place in each region, even within your own country or a single country when you're dealing with those different transactions with different customers from different areas. And some other US standards are the Privacy and Consumer Financial Information, so that governs the use of customers' private data, and the Bank Secrecy Act, which is about knowing KYC standards and also their expected transactions so that you can identify risks if customers start doing transactions outside of what is expected of them. And then this obviously varies as you go global as well. So there are both standards within each country as well as ones that are regional and global as well. So of course we have the GDPR in the EU that protects EU customers and their data. So if you were to expand from the US to the EU, you would have a whole new set of standards that you had to look into and make sure you were following to get up to compliance. And RegTech companies can really help you to navigate that transition from a regional company to a more global company in a much more streamlined fashion. And then there's also standards that are regional and that countries are signing on to as well. So we have, for instance, the Financial Action Task Force, which has set up an international set of KYC standards, and dozens of companies, including like the US and the UK, have signed on to this to say, hey, we are going to follow these KYC standards. And that's good on both sides, right? It creates more consistency across regions and how you're dealing with them. But it also creates, of course, more complications and having to ensure that we have the proper controls into each of these locations. And this is true across all sorts of use cases as well, right? There's regulation that deals with know your customer and anti-money laundering, transactional reporting, security controls that you have to have in place. So you really have to look at each piece of your business to understand what regulation applies to how I'm protecting my customer data from an encryption standpoint, how I'm monitoring the transactions that my customers are performing, and ensure that I'm compliant across the board. And then on this last slide, we're looking at some of the different companies and what they're doing for their customers. So as I said before, we have our financial services at the top. So obviously RegTech started with these different financial obligations that these companies had for that regulation, but it's expanded. It's gone into government and legislation, environment, health and safety, regulatory technology companies, healthcare RegTech companies, vendor risk. So it's really grown out to cover a large environment of different companies. So really, no matter what industry you're in, there's probably a RegTech company that can help you to get to the compliance that you have to do, or even cut your cost for security that you're putting on yourself. Of course, no company wants to leak customer data. So there's RegTech companies out there that can help you maintain compliance, be security positive, and protect your customers, whether that's a regulation due to a regulation from an authoritative body or not. Okay, and then quickly, we're going to go into the future of RegTech. So what are we looking for in the next 4 or 5 years from RegTech companies that we should be looking to leverage? And I think there's a few things, kind of top level ideas that RegTech companies are looking at to bring them into these next 4 or 5 years. So as I mentioned just on the previous slide, they're applying their technologies to new industries. So now that they've kind of gotten a good grasp on the financial regulation, they're saying, hey, we have all these technologies in place. How can we expand our customer base by bringing them to new organizations, bringing on healthcare organizations, bringing on manufacturing organizations, allowing them to use our tools to maintain their regulatory compliance as well, which can allow us to get the most out of our investment into these regulatory tools. They're continuing to improve in their adaptability. So RegTech companies and supervisory boards are becoming much more proactive in how they look at regulation. Of course, in 2008, if you look at what the events leading up to that financial crash, there's a lot of signs there that a problem was about to occur and it was going to be big. So they're being much more proactive in looking into these risks as they come up, looking at new financial transactions, looking at new practices of different organizations, and identifying regulation ahead of time to kind of prevent that type of event from occurring again. They're becoming more data holistic. So they want to look at as much data as possible. They're bringing in more and more data to conduct these, to be more adaptable and to go into new technologies. And they're focusing on accuracy instead of cost. Of course, in the last decade or so, there's been a huge decrease in cost in getting to the point of regulation. And at some point you reach the kind of line where it becomes more cost-worthy. The risks and the fraud within your platform become a bigger cost than actually the compliance tools do. So they're looking to become more accurate so that you can get ahead of your risks and cut down on the loss that your company may have due to fraud to cut costs that way as your newest cost-saving kind of mechanism. Okay, and so here are some of the ways that they're performing those tasks. So I think these first few bullet points really drill down into how regulatory bodies and RegTech companies, and then even the industry companies like financial institutions or medical companies, are working together to kind of bring in the new regulation and the new beliefs in how their industry should be regulated. They're being more adaptive. So looking at things that are occurring, being responsive to that in real time, and taking an iterative approach to that regulation instead of just doing big large regulations that cover a lot of different pieces of information at once. And they're also creating a lot of sandboxes where regulators and companies can work together, look at new technology, figure out the best way to ensure that it's regulated and that customers are protected, to stay ahead of issues in the near future. And then they're collaborating across the globe. So companies or countries are becoming much more collaborative when it comes to this regulation, because unless you're looking at both sides of a transaction, because a lot of transactions are global nowadays, you can't really get the full picture of security. So there's a lot more regional work to ensure that customers on both sides are protected when it comes to financial and other types of transactions. Okay, so that is kind of my quick glimpse into RegTech. Of course, there's a lot more information out there as to what RegTech companies are doing and how your organizations can get benefit from those companies. But I wanted to leave you with some key takeaways from this presentation. So the first being that there's a huge burden of regulation out there for a lot of companies in a lot of different industries. And RegTech companies can really help you to both accelerate your compliance with those standards, as well as cut down on the cost of maintaining that compliance. So it's really multifaceted. It's beneficial to you both as a feature, as well as from a cost saving point of view. Next is compliance. There's a lot of different tools out there that these RegTech companies have available. So look at the type of things that you have to do as an organization to maintain compliance. And I'm sure that there's a company out there that can help you, that you can leverage to help you get to compliance in that silo, whether that be knowing your customer, transactional monitoring, reporting, or any of those other operations that RegTech companies are providing. Innovation. So RegTech companies are always looking to leverage new innovations to help their customers maintain compliance. And this is coming into play even on the supervisory side as well, where regulators are leveraging technology companies to pick what the new regulation should be and look into transactions and find out the best ways to go about regulation on a year-to-year basis. And that's really good because we have technology coming into both sides, looking at the data and making smart decisions on how to move forward. And finally, expansion. So RegTech is really moving outside the financial sector very quickly, which is where they kind of got their start, to other industries that also have regulation associated with them, and allow those companies to benefit from the tools that RegTech companies have developed. So that's kind of my kind of intro to RegTech and kind of an early look at how you can leverage the tools that RegTech has out there. And then we're going to move into Q&A. So Tyler, let me know what questions we have from the audience.
Thanks, Blake. That was great. We do have a few questions here from the audience. Let me pull these up here. All right, we got one from Paul here who has asked, how do you see the rise in regulations affecting the financial burden placed on businesses? Yeah, so I think this is an issue in the last decade that companies have started to get a grasp on, right? As I stated a little bit earlier, 10 to 15%, or if not higher, was what was pretty commonly being spent by financial companies to make sure that they were maintaining regulatory compliance. But that has quickly decreased as regulatory companies have gotten more technologically advanced. They've gotten better at proactively looking at the risks that their customers have. So that cost has really gone down over the last 4 or 5 years, and I think will continue to decrease as these companies get better and better at proactively identifying risks. So I think now is a really good opportunity to go in and look at RegTech companies that your company can leverage to cut the costs that you currently have for maintaining that compliance. There's a lot of companies that provide real good end-to-end solutions in a lot of these silos that you can leverage. Great. Got another one here from Allison. She asked, with so many solutions, where would you recommend companies to invest? Yeah, so I think this really depends on the type of company that you are and what your core business is. I think that the first place to look
is what has the most exposure to your customer base. I think those are the solutions that are going to be where your money is best spent, ones that benefit both you as an organization in maintaining compliance, as well as those that benefit your customers by giving them either better service or a better experience with your platform. So right now, if you have a lot of friction for your customers in any specific area, I would try to identify RegTech companies that can help you to lower that friction for those customers and give them a better experience, while also increasing the regulatory compliance of your company. So you really get benefit on both sides from leveraging those technologies. And I think that's really a good place to start when it comes to leveraging these companies.
Great. We've got a couple questions here about various technologies. The first one came from an anonymous attendee here, and it said blockchain technology. Is this used in RegTech as well?
Yeah, so there is blockchain technology that's being used in RegTech, and I think the main use case right now for blockchain, I know it's something that RegTech companies are researching actively and trying to find more applications for, but the one right now is centralizing regulation. So it's allowing you to spread out your reporting and your transactional monitoring across multiple organizations. So there's real good visibility into all of the different tracking data that's out there. So any regulatory data isn't centralized to one location, it's spread out. There's multiple checks and balances around that data. So they're really using blockchain to ensure that no one organization owns all the data for any particular reporting metric.
Cool. And along those same lines of technologies here, we've got Raman who asked, how do you see biometrics fitting into all of this?
Yeah, so I actually have a really strong background in biometrics from a previous job that I had, but I think biometrics really started playing a huge role when it came to know your customer and other sort of RegTech applications when cell phones started to bring online those biometric readers. So for a long time, you may go to your bank and enroll a fingerprint, and then when you're at the bank, you could do verification that way. But now that I have a facial reading camera on my phone, I have a fingerprint reader on my phone, biometrics have become more mobile with mobile enrollment stations. It's much easier for companies to leverage biometrics as they move forward, both for security and know your customer purposes. So biometrics has just seen an explosion in the availability to your day-to-day consumer. That's made it much more accessible as a technology to leverage for your everyday companies.
Yeah, biometrics are definitely like the future is here kind of moment. We got one last question. We got time for one more here. Josh said, I work in healthcare, and you mentioned healthcare applications. Could you talk a bit more about that?
Yeah, so of course, healthcare is another industry like finance that has a ton of regulations surrounding it. And of course, there's different silos of regulatory companies that can help you do different things within the healthcare industry. So of course, you have HIPAA tracking. So all of that HIPAA data and who's allowed access to certain patient data. There's RegTech companies that have controls in place that help you regulate access to information across your organization, which is probably one of the biggest concerns within the medical industry. But of course, when it comes to prescription drugs as well, there's tools that RegTech has put in place to help you track supply and demand across your organization for those, access to those, everything like that. So there's a lot of different applications that can go into play when it comes to the healthcare industry.
Awesome. Well, that takes us to our time there. Thank you so much, Blake. And thank you to everyone who joined us today. We here at TeleSign are passionate about all things identity, and we've enjoyed spending the last 45 minutes sharing our thoughts with you. Please let us know if you have any additional questions. We would love to keep this conversation going. And enjoy the rest of your day. We hope to see you again soon.
Thanks so much, everyone.